Hello traders, this is day number 89 of Small Cap Market Open Test Trading. We've taken 92 trades so far. We only have 8 more to go before we complete our 100 test trades and decide just how profitable this strategy is and any changes that need to be made moving forward. So this morning, as always, I was here at 9:30 a.m. Eastern Time with my small cap screener open looking for stocks to trade. I always organize the list by volume. I'm only interested in the highest volume stocks and the ones that are trading with 5% or greater percent change. So this morning that left us with, actually SIGA was on the chart page for a while. It was in the green, but it never got anywhere near breaking through its pre-market high or triggering a trade or anything like that. And EBS did not meet the daily chart criteria, so that one was rejected. GNK ended up being the stock that we watched. AXL was also on the screener but rejected because of its daily chart. So GNK was the one we watched. Let's take a look at it in the video. This is a live recording from this morning. So you're going to see me have SIGA up there, and that yellow line represents its pre-market high, which it never breaks. And then GNK, you can see that it's very near its pre-market high at this moment in the video, and it breaks out above that level. So now I'm just waiting for the first high of day to be established after that breakout through the previous high, which that's established here at 24.61, and then I just need to see a pullback and then a high above that high established, and that happens at just 1 cent above that 24.61, which may seem a little bit odd or weak or whatever, but the strategy, the plan, it doesn't care about any of that. If there is a new high, it counts. It doesn't matter if it's 1 cent or $1 or whatever. So that's what we did here today. We marked out that level and we're waiting for a pullback, and then we're waiting for a 1 minute candle to make a new high. And that almost happened on this candle here, but not quite. It just ended up double topping. Now here, I want you to watch the chart, because this is what I saw live. So the top of this candle here is 24.53, and you can see that's where the price is right now, 24.53. So if this thing would have hit 24.54, I would have been triggered to take an entry. But keep your eye on this price bubble right here. I want you to just watch the price bubble that says 24.53 right now. Now we're watching live here. We're looking over here at 24.53, and it drops down to 24.50, never going above 24.53. However, now when you look at this candle, and this happens occasionally, and I'm going to explain what to do when it happens, is you see a little wick popped up, and this could possibly be a Weeble glitch, or this could just be that the orders moved so fast that the price bubble never displayed that 1 cent jump, and there was resistance there, and it pushed the price right back down, as you saw it come down to 24.50. So what to do in that scenario? Well, since this thing just kept heading down and near where my would-be stop loss was, the best thing to do is to just keep watching the price action, and if it went back up to 24.54, I believe, if it went back up to that level, then I would have entered the trade. But since it just kept going down, there's no reason to get back in the trade, because this is showing weakness. So what I do instead now is wait for the next 1 minute candle that makes a new high, as long as the price doesn't go down below this kind of level of weakness, which I established to be 24.25 in this case, because of the ABCD pattern that established itself beforehand. So here is point B and point C of that pattern. So this thing is saying that there should be some support here. And if the price falls below that level, then that means the support isn't there any longer, and I'm not interested in taking a trade anymore. And if you watched the video from Friday, you saw something very similar happen to SIGA, and then it fell below that moment of weakness and reversed, and did give a 3, maybe 4 and 5 hour trade. But that's not part of our strategy. That's not part of our plan to take entries below that level, so we don't do it, and we're not going to do it all the way through the remainder of this test trading. But what we are going to do is, once we complete these 100 test trades, we are going to track how often those trades will work out. So instead of just shutting down Weeble on a day like today, which is what I did, I'm going to put out some alerts so that I can come back later and see, okay, would that trade have worked out if I would have entered below this kind of line of weakness. And if it does work out often enough after the next set of 100 trades, which we will be trading full position size with that next set, but we're going to be tracking some other data that we haven't been tracking so far. So anyway, yeah, we're going to find out if those entries are worth taking or not, and we're going to learn that statistically. We're not going to assume because, you know, 2 or 3 times in a row it happened that, oh, that we should do that from now on. That's just not the way you should trade. You should be trading on statistics, and it's hard to establish any statistical significance without 100 test trades or more. So that's what we're going to have to do when we go full position size. We're going to be tracking other things, and once we have 100 sample size of data of that whatever we're tracking, then we'll know if it works or not. So anyway, let's take a look at the chart right now, GNK, and you'll see how it reversed. The last time I checked, it did give a 2R trade, but I don't think it gave a 3R trade, so it wouldn't have really helped our argument for holding the 3R, which is what this trading strategy wants us to do so far. So yeah, here you can see it's kind of just trading inside the range. So we were looking for an entry after a 1 minute candle makes a new high from this pullback, which didn't happen until after it broke down below this level of weakness. And actually this would have been a really strange and difficult entry if we would have taken it, because what would have happened is we would have entered on this candle, and you can see there was kind of a huge gap here in price. Let me just refresh the chart, which shouldn't make a difference at this point, and it doesn't. So let's look at the top of this candle here was 24.32, and the bottom of this candle here was 24.39. So there's like a 7-cent spread just between those two candles, which is odd, but sometimes that happens in these lower volume stocks. There may not be shares at those price levels, or people are just not selling at those price levels. So someone had their sell order set to 24.39, and someone probably hit a market order when the price was around 24.32, and then the only share that was out there to buy was 24.39, and that pushes the price up and creates that gap. And then you could see probably people became very aware of that, and this thing sold off. So had we entered on this candle, we would have been stopped out there. So that would not have done us any good. We could have re-entered back here, had our stop loss down here. We would have made a 2R trade here, but not a 3R trade. So that wouldn't be helpful either. But those are the type of statistics that we're going to start tracking once we implement this trading system into full position size. So anyway, hopefully this video was helpful to you. Hopefully I didn't ramble on too much. There's a lot of things that I wanted to go over. And unfortunately, once again, we didn't take a trade today. We were not triggered to take a trade today, but hopefully tomorrow we will be. So we'll be back tomorrow and try again. Let me know if you have any questions in the comment section below. As always, go into every single trade with a plan. Stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.